If we want to say, hey, I want a small trade, I'm just going in for a few days. I want to see what the market structure does. I'm going to see if it can pull in. Where would my target be? Well, let's go back to that chart and take a look at something simple like the VWAP at 650 or the open of the week, right, at 645. And then here's a very big volume line. That's a volume point of control that I've got measured on here. That's all the way down at 630. So I would split the difference. I would say, okay, let's look from 650 to 640 to 630 and see what that looks like
Okay.
for the next bit. So 650, yes, sir.
Oh, nice read there. I was just going to ask here. Sometimes with some of these butterflies, we often have a spread that's a little bit wider. Are we a little bit tighter on the spread because the time horizon is much shorter? We're talking about contracts that expire here in 3 days, or is it not related?
It can be related. It's more about where price compression is sitting.
Okay.
And there feels like there's a lot of price compression. Notice the difference in price between the one expiring in 4 days versus the one expiring at the end of the week. They're almost identical, right? 20 cents
you're
apart.
right. They're really not that much. Yeah.
Yeah. So my thought would be pay the upsell price and get yourself in that range. It's got a lot of two things you'll get from going to the 23rd. One, you get it a little cheaper. Two, you have a little more time on your hands. And then three, you'll be able to really move out. If the move becomes dramatic, you can just go, sell to cover. And that's what we would be staring down.
Okay.
That would be my thought for that. Now, let's say you're like Anne Marie. Are you betting against America? No.
They don't know Anne Marie.
Never. If you're looking for the upside, here's my thought. Listen, the pain trade right now is short action. So, number one, I would wait to see it test this big fat round number of 660. Then I would put the order in. It wouldn't be now. Give it time to blow off its edges and then position. You maybe be able to get this at 70 cents, right? And then you could put your stop for maybe a 50% stop loss. So you only have $35 at risk. And then you watch it come down into these edges. Notice the volume drifting off as price action moves higher. Volume is not going in the same direction. We have a lot of things that suggest a little bit of mean reversion is on the horizon. So, Joseph, wait for the fade, probably 645 to 640. Which is where we're positioning our middle strike at that 640 level. And then watch it there. It should be able to pull forward. So nice, quick, tight, reflexive move based on the way the market is going.